I see digital gold. I see a store of value. I see an $18 trillion market cap from 2025 to 2032. So it's trading at 2 trillion. It'll go 9 times. It'll take 7 years. And that's what I see.
This is Alex Cleanthous, and today we're talking with Anthony Scaramucci, founder and managing partner of SkyBridge Capital, founder and chairman of SALT, host of the Open Book podcast and the Rest is Politics podcast, and author of the book, The Little Book of Bitcoin, What You Need to Know That Wall Street Has Already Figured Out. In this episode, we'll talk about Bitcoin and the future of money. I hope you enjoyed this episode, and make sure to subscribe to get the latest episodes as soon as they're released. Now, let's get into it. We're in 2025, and the price of Bitcoin hit $100,000, pretty sure, in December and in January. What's causing this big push and this big increase in terms of the price of Bitcoin, Anthony?
I'm going to give you my theory. And again, it's my theory. And I believe that where we are right now is a direct function of 2022. So hear me out for a second. We were supposed to get a cash Bitcoin ETF in February of 2022. That would have been consistent to the administrative law. In November of 2021, we got a Bitcoin futures ETF. In order not to be arbitrary and capricious with your administration of the law, you would have to follow suit that something identical or more or less identical, you would give the same approval to. And so the Gary Gensler said, no, we're not going to do that. And so I'm going to act like a czar. I'm going to act Trump-like, and I'm going to be arbitrary and capricious and disavow the rules in the United States. And so when he did that, he crashed Bitcoin. Now, the irony of that, Alex, is that he probably saved Bitcoin, and he probably saved the whole industry because he exposed Sam Bankman-Fried, Genesis, Three Arrows. He exposed all of these fraudsters and charlatans that were in the mix, and they imploded. And so that created this sort of clean slate, this sort of fresh start. While that was happening, the bigger players, BlackRock, Fidelity, so on and so forth, said, oh, okay, he's just broken the law. We're going to bring a lawsuit against him. Grayscale was the first to lead the lawsuit. They won the lawsuit. Now, he had the opportunity to appeal the lawsuit to a very conservative appellate court. He would have lost that case. So he didn't appeal the lawsuit, and he got forced, literally forced in January to approve the Bitcoin ETF. And so that was a 2-year delay. You should have gotten that ETF in January of 22. You're getting it in 24. Okay, the price pops. It goes back to half of where it was in November of 2021, but you don't get the price discovery or the price relief to where it should have been in February of 2022 until Trump wins the election, because Trump is signaling, and I think this is true about Australia and certainly true here, personnel is policy. Trump is signaling he likes Bitcoin. He's going to staff the SEC, Treasury, Department of Commerce, et cetera, with Bitcoiners. And so he does that, and it causes the price now to pop to where it should have been in February of 2022. So that's how I see it. And other people see it differently than me. But I think the price is pretty firm as a result of that. This price that we're looking at right now should have happened 2 years ago. But the market's not super liquid. That's the news flash everybody has to know. Everyone says, Bitcoin's got a $2 trillion market cap. It's super liquid. It's not super liquid. You can move the price of Bitcoin with a couple $1 billion.
And so how much of an impact has the BlackRock ETF had in the uptake of Bitcoin institutionally and just from kind of the retail markets?
Really, really, really good question. I would say that they have helped. I think they have ignited Bitcoin. I think they've provided volume. At the same time that they were providing volume, you were getting slippage from Grayscale because of the price differential. And so there was many months where you were netting almost even, stuff was coming out of the Bitcoin markets, stuff was going into the Bitcoin markets. But now on a net basis, I think they've been by and large very, very helpful. And it's just getting started because if you know anything about Wall Street, and I know you do, Wall Street is a huge selling machine. And so the engine of Wall Street and the sales in Wall Street are now getting fired up. And even JP Morgan, their CEO, Jamie Dimon, says it's a decentralized pet rock, it's a decentralized Ponzi scheme. He says all kinds of bad things about Bitcoin, but he's gearing up to prepare himself to be allowed to custody Bitcoin for his customers at JP Morgan. So this scaling that's taking place right now is helping the selling effort. And so said differently, Bitcoin is 0.1% of the world's assets right now. If you were to tell people you need to own a Bitcoin, you need to own percent, 2%, 1%, and you multiply that by everybody, couldn't Bitcoin trade to the price of gold? I believe it could. And so that's why I'm a Bitcoiner. Saylor, who wrote the forward for my new book, who's obviously a genius and way smarter than me, yells at me. He says I'm too conservative and I shouldn't be calling this a store of value or digital gold. It's digital property. It's a network that's this exciting, crazy, wondrous network, and so on and so forth.
You kind of almost just led into my next question because I was asking you about the Michael Saylor effect, right? Because Michael Saylor, how long ago was it that he started to take the cash reserves in MicroStrategy and purchase some Bitcoin, right? Because how long ago, I mean, he started that quite a while ago. Yeah, so he's been kind of almost the poster child just for the Bitcoin kind of industry, right? Because he's been so bullish, right? So what is his perspective on it? And could you also, in the same answer, talk through, like, is Bitcoin a commodity, a currency, a property? That's what you just said, right? Like, is it property?
Yeah.
How do people think about it? Like, I guess the question is kind of, what did Michael Saylor see as part of that discussion?
Great. As obviously, these are all great questions, but let me just step back. I think it's very important to see Bitcoin for what it is. Bitcoin is a kaleidoscope, and so what I mean by that is I'm looking through the lens and I see something that you don't see. If the lens shifts a little bit, I then see something different than you see. So I'll talk for myself. I see digital gold. I see a store of value. I see an $18 trillion market cap from 2025 to 2032. So it's trading at 2 trillion. It'll go 9 times. It'll take 7 years. And that's what I see. Other people see different things than me. I see that. Okay. Michael Saylor sees a global property network. Michael Saylor sees the operating software, the OS. This is the operating software for the world. Monetary transactions, value, permissionless value is going to go back and forth between the Alexes and the Anthonys without the helps of the banks. And that's what Michael Saylor sees. And so Michael Saylor sees 7-8% of the overall assets of the world. He sees I'm just going to say it. Okay. He sees $13 million a coin. Okay. I see $1 million a coin. Okay. And he yells at me, like he wrote the forward for my book and he's like, your book is great. I learned so much in your book, but the last chapter of your book was terrible. I was like, well, what are you talking about? So, well, you just told me this is the best idea that you ever had. And you've been in the business for 36 years. I said, yes, it's the best idea. He said, well, do you have 49 other ideas like this? Because you're recommending a 2% allocation. So that must imply that you have 50 ideas like this. I said, no, I don't have 50 ideas like this. Well, what's your percentage of your net worth in Bitcoin? And so, by the way, it did start at 7. It's now 60. Not my fault. I mean, Bitcoin just ate up the rest of my portfolio. I didn't sell any of it. So it does this to your portfolio. And so now it's tremendous. A lot of people would sell the Bitcoin and diversify. I'm not doing that. But he said, well, if you're at 60, I'm at 110, you're recommending 2%. WTF? What's wrong with you? So I ripped up the chapter. I rewrote the thing to reflect this sentiment that if it's really this good of an idea, and I believe that it is It's a tremendous idea that we have to own more of it.
Why do you believe it's such a good idea? Yeah. And so why does Michael Saylor believe it's such a good idea? And how do you not sell these fluctuations, right? Because the
Yeah.
volatility is quite high compared to like standard investing. And obviously,
Okay. Well, I'm going to say two things for you to think about, and then you'll get the answer from the provocative things I'm about to say. Okay. So, provocative thing number one, if you thought Amazon was an internet bookseller in 1999, then you thought it was too expensive. You didn't buy Amazon. If you thought he was selling a book, because look at these books, they're roughly the same size. And so, why did he start with books? He could sell something that's roughly a pound. He can ship it around the US, and then he can reverse engineer and dot plot the warehouses to sell everything. So he started with a book. It was easy to maneuver. It was easy to go back and forth with, right? So that's one of the things that he did. The second thing that he did is he rode the vomit comet of the oscillations of the wave as his company was getting adopted. So let's talk about it. It goes public in May of 1997. It drops in value 8 times, 50%. It drops in value 1 time, 90%, March of 2000. Okay, and then it drops in value 4 more times, 25 to 30%. The global financial crisis, it touches 50 again. Okay. And so now this asset, a $10,000 investment in this asset known as Amazon, is worth 17 million US dollars today. There's one or two people, Mackenzie Bezos, Jeff Bezos, one or two other people that held the asset. Everyone else ditched the asset. Okay. And did what you said, well, why would you hold this? Why not trade the volatility or trade that? Blah, blah, blah. They held the asset. And just think about this for a second, because I think it's very important. Let's go to the internet. And you're old enough. What year were you born, Alex, if you don't mind me asking?
1978.
So you're born in 78. So you're old enough. So when you were 20 in 1998, you had a fat box computer somewhere in your house, and you had maybe an AOL disk, and you maybe had a dial-up modem that Word and Bird to click you into the internet. And it was a very chunky, hard thing, but it was cool.
It was the
And you
best.
went on eBay to buy a Pez gun, and you went on Amazon, and you had an email. Maybe you went into a chat room for AOL. And it was okay, but it was a lot of hype. And someone like Alex could have came to you and said, what the hell is this all about? Why is there so much hype? Now, what if I beamed in? I beamed in from 27 years later. I came in, beamed in. And I said, Alex, how you doing? You're 20 years old. Let me tell you, this thing called the internet that you're playing with right now is actually really is going to transform the world, because we're going to build on it. We're going to have global pipes, global Wi-Fi, fast internet technology. We're going to put the computer that's in front of you into your hand. We're also going to allow you to stream 4K videos. There'll be 8 or 9 billion people on Earth in 2025, and you'll stream 8K, 4K videos. We'll all do it together. There'll be trillions of dollars of commerce on the internet, and it will have transformed each of our lives. But it started out as this clunky dunky thing. Okay, and so I gave you 2 examples. One, buy and hold, shut your computer off, shut your emotions off. Number 2, extrapolate where this could be if it is fully adopted and it goes exponential. So those are the reasons for me. And here's the other fucking thing. You're allowed to curse on this podcast?
Yeah. Curse. Curse away.
I don't
curse
give
away.
a shit, okay? I don't give a shit. I'm 61 years old. I was born in 1964. I've been on Wall Street 36 years. I'm not a big liver. I don't have tall poppy syndrome like you Aussies. I don't give a shit. I'm not looking up other people's asses, and I don't want them to look up my ass. I'm just living my life, and I'm sitting on a ton of Bitcoin. And if it goes to zero, and I always do that, look at me. I take my thumb, I go over the balance sheet, and I say, okay, I don't own it. It's at zero. Can I afford my lifestyle? And the answer is yes. So, okay, that's it. I'm going to hold it, and that's it. If you want to be with me, great. If you don't want to be with me, I completely understand. No problem.
It's like the story of, I forget the person's name, but they had $5,000 in Apple stock and they sold it in like the 70s or something. And now it would be worth like $3 billion or something. And I'm sure there's not the correct numbers, but it's something similar. It's really hard to hold it for that long.
But think about what Ballmer did. Gates said, I got to sell. I'm going to diversify. He sold. And Ballmer is now worth more than Gates because he said, I don't give a shit. I'm not, I'll hold on to it. And by the way, when he ran the company, it sucked. It flatlined. When they gave it to Pindar, I guess his name is, I don't know how to pronounce his name, but it rocketed. And Ballmer's the beneficiary of that. And so, listen, there's a reason why the dead people at Charles Schwab, they do better than the living. You can go look this up on Google. The dead people's accounts do better than the living. But you know why? They don't look at their accounts, Alex. Dead people don't look at their accounts. They're dead. They don't get upset when the account's going up and down. And so you can't sell. And if you just hold and stay the course, it's not for everything. Kodak will go bankrupt. GE will take a big stumble. It's not for everything, but it's for a lot of things. You've got to bet long-term on the greatness of American innovation.
So let's talk about this concept of the digital property, or however you explained it before. How do you, it started as an idea to be a counter to the fiat system, right? And from the research I've done, Satoshi Nakamoto, he wanted kind of the freedom outside of the existing kind of monetary systems, right? So it started off as kind of a rebellious currency, but now it's become a store of value, right? So it started off as an idea. It's become something else now. So now it seems like it's more like a commodity that is linked to the price, to the fluctuations of gold. But how you're explaining it is that it's becoming something else, right? Potentially. Yes. Where could it go into the future, right? Because at the moment, it's Bitcoin, I hold it. I have to keep my secret key somewhere unless it's on the centralized exchange. So what is the future of Bitcoin look like? Is it just like gold, or does it evolve into something else?
That's the analogy. That's the example I'm giving you. I just told you what the internet was, and I told you what the internet is now. You and I couldn't do a George Jetson phone call, me in New York, you in Australia in 1998, not happening. Don't have the bandwidth. We don't even have the we don't even have the compression technology to pull it off. But now we do. We look like very seamless to each other. We almost look like we're in the same room. And so what I'm saying to you, you're not seeing it because it's not in front of you. Let me tell you a very big mistake a human being makes. Your brain is a 100,000-year-old piece of machinery, hasn't had a software upgrade in 100,000 years. The phone in front of me, the computer, the phone's gone from iPhone 1 to iPhone 16 in 15 years. Your brain is 100,000 years old. So your reticular system is designed to think linearly as part of your survival mechanism. And so here's the linear thing in front of me. Here's my survival. I'm going to assume that what's happening today is going to happen tomorrow. That's a protective device. But that's not how the world is working. The world is working and moving exponentially. So when a guy like Thomas Malthus says, we're going to die, and you say, why are we going to die, Thomas Malthus, a famous economic historian in the UK? He said, we're going to run out of food. The population is growing exponentially. We can only grow the food linearly. We're going to starve. He leaves out irrigation. He leaves out GMO. He leaves out vertical farming. He leaves out all the great technologies. We have more people dying from obesity and gluttony than we do from starvation. Okay. When I was a kid, they told me we're running out of oil. They said it's peak oil theory. We're running out of oil. We'll be out of oil by the year 2010. And, we are. Okay. But they left out fracking. They left out GPS. They left out the new sonography of the ocean, the new techniques to offshore rig and drill. And we have more oil than we know what to do with now. In fact, we're creating an environmental problem. But my point is, you can't sit in the seat you're sitting in and look at Bitcoin where it is today. You have to look at Bitcoin and where the world is going. Now, what I do also know about the world is we have a bunch of drunk drivers on Earth that are central bankers. And they are drunk driving with our currency. They're effing up your money. Okay. I don't know what the Australian dollar buys today, but I can tell you that 2 US 1971, pre-taking the US off the gold standard, $2 is the value of a $100 bill today, 53 years from now. Yeah, I can tell you. Oh, sure. You go look at the numbers. Go look at the purchasing power. We destroyed the money. Said differently, my parents' house, $16,000, purchased in 1962. If you go on American Zillow, the Zestimate for my parents' house is $780,000. But if you price my parents' house in ounces of gold, the conversion should be 1.2 million. See, the house actually lost value in ounces of gold. It went up in nominal US dollars, but that should make sense because the technology that built the house, the wear and tear on the house, it should be less than what it was in terms of its purchase price, but it's up on nominal values. And this is the sneaky thing about inflation. It's a regressive tax, but people weirdly like it, Alex, because if I have $1 million, I'm a millionaire, even though it has the purchasing power of $20,000 in 1971. You see what I mean? And so here we are. See the world for where it's going. Get out of your reticular system and your linear thinking and recognize that we have drunk drivers. And eventually we're going to have to, as a group of global citizens, take the keys away from the drunk drivers. We're going to eventually have to do that. And so that's another big asymmetric upside to owning Bitcoin, not just sitting there, store value in your keys. At some point, people are going to add it to their balance sheets. At some point, they're going to add it to their corporate and governmental treasuries.
So MicroStrategy, it started just to purchase it just with its spare cash reserves because it saw this kind of same issue, right? Just with inflation and the degrading of value of the cash in the bank and so on, right? What is a good strategy for a company to think about? Like if they've got a cash reserve, how should they be thinking about this? Is this something that they should just be holding for long term? Is it something that they should hold for the shorter term if they have it? Like, is it, because I think like everyone is looking at Michael Saylor and thinking that was smart, right? But obviously he's very, very smart, right? So you probably shouldn't just go out and spend all your spare cash in your company and purchase some Bitcoin like Michael Saylor did, right? Like he's done a certain strategy and there's a separate one for everyone else, right? Where
here's what Michael Saylor would say to you if he was on your podcast. He got his ass kicked. Okay. He has a software tech company. It's done okay. It's been around for 30 years. It was a boom in 2000. It busted in March of 2000. He was literally a cover boy for stock going down 99%. He stayed in the game. He had enough software applications that he could sell to different corporations, and it was an okay, decent business. Okay, and then lo and behold, he was very negative on Bitcoin, didn't understand Bitcoin. He started studying Bitcoin, and he said to himself, wait a minute, this is the operating system for the global exchange of value. Now, you may not believe that. I may not believe that, but he believes that. And so I didn't even invent this thing, but all I got to do is own a large piece of it because these tokens are going to be the country, the world, Safa Day and Amos, the Bitcoin standard. It's going in that direction. And so I, at MicroStrategy, mediocre software company, got my ass kicked by Microsoft and Android and Google, but I'm not going to get my ass kicked here. This is the monetary operating system for the world. And I'm going to use my understanding of mechanical and electrical engineering and my understanding of software application. And I am going to re-engineer my company to be the owner of a very large piece of the operating network that the world is going to operate on in terms of monetary transfer. And so that's the vision. That's his idea. And so he's heading for $1 trillion in his mind, because if Microsoft could be the operating system for your computer or my computer, and he could own a piece of the operating system for money, he's going to be a very, very rich man, and he will have transformed a company that did okay. He had a very nice living for himself into a multi-billionaire and a possible centabillionaire, possible. And that's his vision. Well, I am more conservative than him, and he yells at me. I looked at this. I got into it 2 months after he did. He made his first investment in August of 2020. I made my investments in October. I got roundly ridiculed by all my friends. They told me I was a dummy, and they told me I was an imbecile. It went up in 21. Some people thought I was a genius. It went down in 22. It was a confirmation that I am an imbecile. And then it went up in 23, went up in 24. You tell me what I am. I don't think I'm an imbecile, and I don't think I'm a genius. I think I saw something in the marketplace that's mispriced, and I've got 3 things going on at the same time that are going to benefit this thing. Number one, I have drunk driving in the central banking community. I have extraordinary overpromises from public servants around the world that are extraordinarily overpromising their people, a result of which they're going to tax them. Elon Musk is right about that. Deficit spending is a delayed taxation. Okay, it's just unfunded tax liability. Okay, well, you're not taxing me, but I am, because I'm ruining your money. So it's a regressive thing. This is the great irony. This is why we have great populist and nationalist movements globally, because the people at the bottom end of the spectrum are saying, hey, man, this isn't working for me. I get my money from my time and my labor, and you're stealing it from me through inflation. My house is going up in value, but I don't own a house. See what I mean?
Yeah, I
Remember,
do.
my parents' house, $16,000, now worth, Zillow's estimate, 780, down in value, measured in gold coins, measured in gold ounces. So you got to understand what they're doing. Once you understand what they're doing, you say, okay, there's a big wind behind my sail, and next year could be tumultuous. There's many disbelievers. Aussies are generally very cynical. I mean, Aussies, my experience in Australia, they hate fees. They're cheap. They hate fees. They won't pay hedge fund fees. Super cheap. They don't like people that are super successful or braggadocious. They say that's tall poppies. They want to cut.
Oh, poppy syndrome.
They want to cut them down. Okay. And what is this bullshit known as Bitcoin? It's got to be ridiculous. My buddy Cliff Asner said, so it's a computer that's turned on 24/7, and it's just a bunch of financial blather. How could that be worth anything? So he doesn't understand the prowess and the promise of that network. He hasn't studied Robert Metcalfe and Metcalfe's law. And I would submit to him, because I would say with great humility, I've been humbled by markets. I've been humbled by life. But I would submit to you that if the marketplace is saying that this asset is worth $2 trillion, it went from zero when they turned on the network to $2 trillion. There could be some smart people in the mix that may know what they're doing. There's a madness to crowds, Alex, but there's also a wisdom in crowds. It's a tulip bulb. Okay, well, the tulip mating lasted 2.5 years. We're 16 years into this, and and there's no counterparty risk. So if there's no counterparty, it's not. How is it a tulip bulb? It's a burgeoning, adopting network, and a result of which, because of the scarcity of the tokens, it should get priced in Satoshis eventually, and it'll be worth $18 to $20 trillion. Or if Saylor's right, it'll be worth $300 trillion. I don't know. I have it at 18 to 20.
So there's still central banks, obviously, at some point in the future. Potentially this is too big of a question, but I'll still ask it, and then we can skip it if we want to. But how do the governments start to respond to this threat, I guess, to their internal kind of governance, operating systems internally? because like now it's a secondary currency.
Okay, so an old school 90-year-old fossil, aka an American politician, because these people won't leave the stage. An old school 90-year-old fossil, George Washington's great grandfather, still in American government, is going to see it as a threat and is going to want to see if they can do something to it. It's too late. You can't strangle it in the crib. It's out of the crib now. It's moving. It's a teenager. You can't strangle it in the crib. But the new politician, a visionary leader, would say, wow, there's a big opportunity here. Because if I can get some Bitcoin on my balance sheet and I can begin the process of reform in terms of the spending, the overpromising, if I can figure out a way to correct the excesses that we've created in this system due to baby boomer narcissism, Bitcoin could be a tool for this discipline and could be a tool for this correction. And I could blame my need to have some level of fiscal conservatism on things like Bitcoin. Bitcoin is making us bite the bullet a little bit, because if I can't create Bitcoin and I can't do the manipulations that we do with our money, the government, the United States, printed $5 trillion in 29 months, printed it. Okay, we had a $31 trillion budget deficit 29 months ago. Bam, bam, bam. We have a $36 trillion deficit. So you tell me, there's no cost to that? See, the modern monetary theorists are right in the following respect. If you have the debt denominated in a fiat currency that you yourself can create, there's a lot of laxity and a lot of space there. However, what the modern monetary theorists leave out, your lower and middle income people struggle and get suffocated by this because you're confiscating their purchasing power by creating more dough. More dough in the system, same level of goods, the price of the goods are higher. You're paying me a flat rate and it's tied to my labor, not to my assets. I'm screwed. I can't get ahead. 8% inflation in the US. You paid me $1,000. I only have $920 of purchasing power. So yes, my wages are $20, but you took 10% of it from me. I really only have $18 worth of spending power. And by the way, while you're doing that, the rich are getting richer on assets. If you want to choke out, like I don't know if you have like an EKG in your house, but if you want to choke out, factor in the real estate inflation in Australia. Factor it in. Factor in not just the price of the goods and services, factor in the price in the stock market and the real estate, and really measure the inflation. Really go out there and say, whoa, there is a reason why a 30-year-old kid right now, I'll talk about the US for a second, 30-year-old kid sitting on a mountain of school debt, he doesn't have the wherewithal, the money, or the job opportunity to buy a house right now. Baby boomers suck the life out of these kids. They generationally transferred wealth from the younger generation to their generation because they're the weak. We had the greatest generation that fought the war, and they handed the baton to the weakest generation who took all of the spoils of everything for themselves. And now they're heading into their mid to late 70s. They don't want to leave the stage. They don't even want to give the kids an opportunity to have a job or to run for Congress. They want to sit on their faces. Okay, you got these jackasses in Washington wheeling themselves around in wheelchairs. We had this one woman, this poor woman, Dianne Feinstein. She was like half dead voting. The other woman, they discovered she's in an assisted living home, can't even get to the Congress, but she won't leave the job to make room for a younger person. So I think the system will break, and I think there will be a renewal, and I think there will be a reset. And when there is, Bitcoin will have a big role in that.
What about the other? I mean, there's so many other, what's it called? I say, for example, the Ethereums and Solanas and all the other. It seems like there's so many other cryptocurrencies out there, but that Bitcoin is the gold standard, let's call it. Should we be investing in other areas too, or is it just Bitcoin right now? And we'll see how everything else kind of lands, because it feels like that's the conversation. It's like investing in Bitcoin is like the safest of the cryptos, let's call it. It's still kind of volatile. Everything else is more speculative, but that could be the operating system.
Yeah, Saylor's a Bitcoin maximalist. I'm not a Bitcoin maximalist. I believe I believe that Bitcoin will be what I said, a store of value. It's not going to be used. You could transfer back and forth to each other, but it's sort of a store of value. You'll toggle from that to a stable coin. You'll toggle to that from something else. But I believe something like Solana or Ethereum, where you can layer on contracts, I believe you can tokenize things. When you buy a stock in the United States and you buy it on the open market, you go call somebody, I'm going to buy Microsoft. It goes through 7 different entities still to this day before it reaches your account. We started when I was in the industry 36 years ago, T+5. Then we went to T+3. Now we're at T+1. But we have the technology over the blockchain to go to T plus a few seconds. We do have that technology. But the old world doesn't want to give up. Okay. And the regulators don't want to relent. But the new world is coming because the younger guys don't care. Okay. When I was a kid, I had to call my mother every Wednesday. Okay. If it, tight leash, Italian American family. I'm in Europe. I got my Ural pass in my backpack. It's 1985. Got to call your mother on Wednesday. Well, I would go to the post office in the local square and I would buy a phone card. You could buy a phone card for 15 US dollars, it's like $100 today, and you could have a 5-minute phone conversation with your mom, $3 a minute. You'd hook into the AT&T operator. She'd dial your mother's phone for you. Your mother would answer the phone. 5 minutes, they'd beep, 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 and then the thing would shut off. Okay, and you'd leave the central square where the post office is and the phone booths are. I committed to my mother. Today, you can go to any cafe in Rome and I can hook into the internet and I can FaceTime my mother for free. And that's the financial services industry in a nutshell. Now, $35 for a wire, 7 days for a wire, 42 different IDs. What are you doing sending money to Alex in Australia? Fill out this paperwork. We're going to debank you. You're from crypto land. You're not allowed to have a bank account. To, hey, go fuck off. We're going to do this in a decentralized way. And we're going to do to the financial services industry what the internet did to the phone industry. Now, by the way, as Visa has figured out, American Express, others, there'll still be roles for them like there is the phones. And the phone industry didn't go away. They just shifted their business model. And that's what these fintech companies will do. And so you're going to need Solana. You're going to need Ethereum. You're going to need Sui and Aptos and Avalanche and Solana's little brother Algorand. You're going to need all of these people. Okay. And there's not going to be one vehicle, but maybe there'll be smart contracts for stocks on Solana, and there'll be smart contracts for bonds on Ethereum, or there'll be gaming tokens, inter-game Web3 gaming. You and I will play each other for money and trade Polkadot tokens.
Yeah, that's where Avalanche is going with gaming as well.
The future is going to extrapolate exponentially. It's not going to extrapolate the way we predict. It's just not going to do that. If you told me that we have switched over from chemotherapy to immunotherapy, and we're treating people who would have died 50 years ago by strengthening their immune systems, and they can live out their lives. I have a friend that has cystic fibrosis. I don't know if you know what that disease is, but it's these sort of fibroids get created in your lungs. It's a genetic disorder. And you pick it up by getting 2 recessive genes from your parents. And it's a genetic, like a sickle cell anemia. It's in the lungs. And this was a life expectancy of 7. And it's now a life expectancy of 85 because they have figured out that there's a missing genetic component to the production design, and they can drug deliver it, and they can recode your gene to produce the right material for your breathing. Now, I don't know. Did the people 200 years ago think we were going to be able to figure that out? You know, people living in 1825, they were like, yeah, my son's not breathing and he's going to die in 7 years. They go, no problem. 200 years from now, that very same person going to live to 85. You gotta get out of the comfort zone of linear thinking, and you got to think about the way the world is moving. And is this worth having a position in if some of the things I'm talking about are right? If you're going to go to a costless transaction, like we're now on a costless phone line, you paid a monthly fee for your Wi-Fi. I paid a monthly fee for mine. I can do this with you all month. I could leave it on, no problem. Okay, the incremental cost is 0. Are we going to do that to the world of financial services? Is the software going to eat these companies or change these companies? I think it is, and I own the shit. If it doesn't, then I got it wrong.
And so you basically own it, and it's for the long term. And so you buy something and you predict just where it's going to go in the future, hopefully. Yeah. And how long is your how far out are you looking? You know, so if you're purchasing,
I'm 61 years old. When I turn 80, if I can make it to 80, who the hell knows? Okay, but if I make it to 80, 19 years from now, I will figure out what to do with this shit for my kids. If they don't want it, we'll sell it. You know, if they don't want my comic books collection, put it up for auction. I don't give a shit. I'm not going to be here.
And probably at that point, the comic book collection, it can be sold on the blockchain in some way. It's a real world asset that's linked to something.
You don't know. I mean, my point is, if you told me 20 years ago, 2005, I had a flip phone, I could send text from it. It had a rinky-dink camera. Okay, and then BlackBerry said, we're going to let you do emails. We'll put some apps on this thing. It's going to basically be a Palm Pilot with cell service. And then Steve Jobs said, yeah, that's bullshit. We're going to turn it into a computer. And we're going to eat everything. We're going to eat everything. We're going to eat your printer, your fax machine. We're going to eat your iPod. We're going to eat your music collection. We're going to eat your Blockbuster video, wherever the hell it was in Australia, all your VHS. We're going to eat everything. And we're going to shrink it into this little fucking thing here. And by the way, we're going to make you addicted to it. So you're going to spend 5 to 8 hours a day, and you're going to get screen time notifications that you got a screw loose because you got 1/3 of your life sleeping and 1/3 of your life staring at that. Okay. Yep. But you're going to need money, and you got a group of people that have been drunk driving with your money now. U.S. 54 years of drunk driving, August of 1971. And drunk driving with the money. We don't have any discipline with the money. Bitcoin forces that discipline. Bitcoin is clarity.
For people who are not in the crypto space, look, the fiat system, for all of the downsides, at least has some safety features kind of just locked into it, right? So that if you get hacked, if something happens, then Visa or the bank will kind of like insure it and so on, right? Now, in the crypto space, it's all essentially the private keys, right? And if you lose kind of the private keys, then you lose your Bitcoin, or it's on a centralized exchange. And if the centralized exchange gets hacked, then all your Bitcoin goes as well, right? So how would you say to people?
Some of these exchanges have insurance.
Yeah, but
some of these exchanges have backups. But yeah, you're making a very good point. Which
ones are the better ones to go for, just based on your research? And yeah, so what would you say to people? Because obviously there's like that part of it too, where yes, it's got like a fair bit of upside, but there's a lot of stories of hacking and exchanges going down and kind of different things like that. So yeah, what would you say to people about that? Like how How would you advise your grandma, for example, or your mum, or whoever who wanted to purchase some, the safest way of doing
Yeah.
it? What's the safest way of buying Bitcoin?
Yeah. So I would say to you that we built the car and we can run around with the car. It's a fast car. It's faster than the horse and the carriage. It's a horseless carriage. But we haven't figured out the highway. We don't know where the road is. We certainly don't have a traffic lights up. Okay. And we haven't come up with the levels of rules for when to make a left turn and what signal to use and when to make a right turn. And by the way, what side of the road are we driving on? Some of us drive on the right side, some of us drive on the left side. We don't have the rules. So everything you're saying is healthy skepticism. And I think what you're saying is in fact true. Okay. And then you have to ask yourself, okay, so will the industry, will the society solve for this? Will there be some regulation and will there be, in our country, there's a security protection corporation. It's called SIPC, Security Insurance Protection Corporation. I have my Microsoft stock at Goldman Sachs. If Goldman Sachs goes down, they'll get my CUSIP number out of Goldman Sachs and they'll return it to me. Okay. If I have, it's up to $250,000 now, but it's actually way more than that. But it's up to $250,000 now, but they never let these banks fail. But if my money's in the bank and the bank's going sour, either the government's stepping in or the FDIC. And so the question is, will there be a system where that happens for Bitcoin? This is where I think the opportunity is for Visa and American Express. You can use your Bitcoin or you can use your cryptocurrency with us. You'll pay us a tiny fee. You won't pay us the 3.5% that you've been paying, but you pay us a fee. And if somebody rips you off, we'll be in there with our insurance to protect you. So I do think that that's coming. That's the traffic light and that's the double line in the road and that's the street signs. They're not there yet. And that's why when I say this, when we're so early, it's ridiculous. You're 6% saturated. You're Web 1 1999. And you own the operating system. You own the HTTP : / You own that. And you own a piece of it.
Yeah, and I think on that point as well, I guess the biggest upsides are made now because as soon as it becomes a safer and more protected like investment category, then there's less risk and then there's less upside kind of thing, right? So if you want maximum upside, the sooner that you get in, the better. Obviously, there's kind of higher risk, but that's why there's higher upside, right? So that's kind of how to think about it.
100%.
Okay, well, look, I think I could keep talking about this for a while, but this has been really good. What the summary is that it's the future. It's the future of the monetary system or potentially the future of the monetary system. So have a small percentage in there and just forget about it. That's the best investment strategy for Bitcoin is just have some, forget about it, and have a look in 10 years' time kind of thing, right? Because if you look at it per hour, per day, which is how I look at it, right? You can easily be, shut out or scared out of it.
So I would tell you, if you had 1% or 2% in it, and I'm right or Sailor's right, it could be a game changer for you because it could go 20 to 1. If I'm wrong and you have 1 to 2% in it, 98 cents and everything else, I don't think it impairs your life. It's not a permanent capital loss for you or your family.
This is the final question, and just a quick one. So is there anything happening in the US with the 401k and Bitcoin? Because right now you have to invest it in the stock market, which is just a complete, like, I don't want to say scam, but like it's not providing the promise that it's supposed to because of the stock market kind of volatility. Can you invest kind of 401ks into the Bitcoin?
Well, you can buy Bitcoin at Fidelity. We are one of the first companies in the United States that have our 401k sitting at Fidelity, and you can actually buy Bitcoin, but it's in a centralized area. Fidelity will custody it for you in your 401k because they're an accredited, regulated 401k custodian. Now, they have layers of protection on it. They've got backup systems. They've got Lloyd's of London insuring the Bitcoin, but they will only allow you 5%. If you have $1 million in your retirement fund and you want to own Bitcoin, they'll let you own $50,000 worth of Bitcoin. Now, that's the starting number. So in other words, I got $1 million. They'll let me buy 5% of it. If Bitcoin goes up 10 to 1, they don't force me to sell it, but your starting number is 5%. And so, yeah, you can use Bitcoin. You can't take it out of that account though, because like you were saying with your own keys and custody it, because in a 401k, it's got to be in a 401k custodial account in the US.
It's the same thing here with superannuation. No, it's because that might be just the easiest way for people to get started, right? Is that like if they've got some funds in the superannuation or in their 401ks, you can't spend it anyway. Perfect thing to buy Bitcoin.
I've been in Newcastle, Australia, giving keynote addresses to the superannuation conferences. And those very good people are not buying Bitcoin. I'm just telling you. They don't understand it.
No, they're not. But could you buy it like as a person who took control of your own superannuation or who took control of?
I don't know. I mean, I don't know the rules in Australia, but in the United States, you can.
No, but in the US?
Yes, you can.
So that's a good way in, right? So that's probably what I guess everyone should take a percentage of their 401ks or the superannuation and just put a little bit in, a couple of percent even, or 3%. And this is not financial advice. I'm not a financial advisor. Yes, all those disclaimers, but it's just a really interesting way to think about the different ways that you can get exposure to it, right? And it doesn't have to be just from the paycheck. It could be from your 401k or from your superannuation. It could be from other areas as well.
Good stuff.
Anthony, thank you so much for coming on this podcast today.
Oh, it's great to be on with you. Thank you for including me.
If people want to find out some more about you, so how do they connect?
So I'm at Scaramucci on Instagram and Twitter. I'm at Scaramucci on LinkedIn. And I also have 2 podcasts. One is a UK-based podcast called The Rest is Politics US. I do that with Gary Lineker, the famous footballer. He's the owner of the company, but I do it with Caddy Kay, the British journalist. I have my own podcast, which is about books. Basically, it's called Open Book. I interview authors, and and I'm a Bitcoiner. I've just written a couple of books on it, and I don't know. We'll see. If I'm right, hopefully you'll invite me back. And if I'm wrong, you can invite me back, and you can dunk me in the water. But I don't know. So far we've been right.
Yeah, so far that is the case, and I'll put all of the links in the show notes. And just a quick last point is I think I interviewed a guy called Tim Draper 3 years ago, and he predicted at the time that Bitcoin would hit, I think he said about $300,000, right? Or $250,000. And everyone laughed at him. And he's becoming correct, right? And so I think you are right. It's just how soon it happens, right? Because I think this is the one thing that everyone is not actually just getting is the time, because sometimes it takes a bit longer. But everyone has seemed to be correct so far, like in the Bitcoin space. It's just a little bit kind of after the time that they said it was, So
we'll see. I mean, look, it could go to 10,000 again, and people will say, "Ha ha, you got it wrong."
If it goes to 10,000, I'm going to buy a lot of them. I'm going to buy it as many as I can if it hits 10,000. That's the stuff.
We'll see what happens. I don't think that'll happen though. There's also it's got a regulatory promise now in the U.S. to directionally go in the right direction.
Yeah, fantastic. Thank you so much, Anthony, for coming on the podcast. It's
great to be on with you. Thank you, sir.
Been awesome.
I enjoyed it. Thank you. Have a great night or great morning. I think you're in the morning there. So
in the morning, it's very early.
Enjoy your morning.
Thank you so much. Bye-bye. Thanks for listening to the Growth Manifesto podcast. If you enjoyed the episode, please give us a 5-star rating on iTunes. For more episodes, please visit growthmanifesto.com/podcast. And if you need help driving growth for your company, please get in touch with us at webprofits.io.